Thanks for watching the Mortgage Minute. Today I want to talk about mortgage pre-approvals and how to know if yours is legit. The first point, main distinguishing point, is that a rate hold is not a mortgage pre-approval. So a rate hold is, as the name implies, typically known as a rate hold certificate. So many banks, lenders, and brokers provide you with a rate hold certificate. And what this does is specifically specifies an amount of time and a fixed term that your rate is good for. Nowhere within a rate hold certificate do they have a request for verification documents, hence the pre-approval, or often known as the mortgage pre-qualification. Now, true mortgage pre-qualifications require verification checkpoint items, and these are the three most common ones. If you do not have these requested at the time that you are doing your pre-approval, you could conclude that your mortgage pre-approval is not legit. So the first verification checkpoint is income confirmation. Depending on what you do for a living, you'll be asked for a letter of employment, a pay stub, or if you're self-employed, the most 2 recent years of tax documents. Number 2, a credit check. Yes, one is required when you're doing a pre-approval. There's no way around that. Point number 3, down payment source and verification. It's very important for the lender to know where your down payment proceeds are coming from, and they will need verification documents to verify so. Wildcard mortgage pre-approvals. Now, what this simply means, the term wildcard, it's not an official term within any lending circle or any brokerage or any banks that we deal with. It's one that it's made up on this presentation right here. And wildcard mortgage profiles basically mean that more documentation is required up front. And it's in everyone's best interest that we gather as much information as possible up front for these particular profiles. The first one, the most common one, for self-employed applications. Typically, there is an element of stated income required in self-employed applications. And for that reason, you may be requested for a bit more income confirmation than the typical applicant who is not self-employed would be requested. Recently rated credit profiles in the past 2 years. So if you've been in any credit trouble in the past 2 years, and I guess the starting point of trouble would be defined as if you've been more than 2 payments late on any credit facility. Now, that wouldn't outright decline you for a mortgage, but just more information is required. Point number 3 there, unusual property type, condition, location, or zoning. So if you're purchasing a property or putting an offer down on a property, you may not know of until you go out there and start shopping for the property. So we may have qualified you for a residentially zoned property in an urban setting, but you may end up purchasing a property in an urban setting, but it may be commercially zoned on a 5-acre parcel. Okay, so that's a little outside the scope. Again, just more information required. And finally, any other outside the box applications that require special approval. That could be, for example, the addition of a last minute cosigner, or maybe perhaps unexpected items that may arise in the condo documents or the home inspection. Finally, to review, you know your pre-approval is legit when, number 1, verification documents have been requested from you. And number 2, you've received a detailed email or document that states the conditions of your mortgage pre-approval. Please don't hesitate to reach out to me if you require more detail on anything that I discussed or anything mortgage related for that matter. I hope you found this content of value, and I encourage you to share it within your network. Thanks for watching the Mortgage Minute. I'm Marco Gello.